want money. And Dominic, you help people acquire it. I'd like you to meet Glenn Manton, who will be with you for the next few weeks.
Glenn, lovely to see you.
And good morning to you.
Yeah, we have met a while ago.
Yeah, good.
It was on a different topic. It had to do with jewellery.
Correct.
What?
Yes.
What brought... Hang on a minute.
We'll leave that.
What brought you two together talking about...
We'll leave it right there.
Leave it right there. I'm already nervous enough regarding this money chat. I always get nervous when people talk money.
Money's like going to the Victoria market or prayer market. There's all these people selling things, and their oranges are better than their oranges, and these things are worth, $7 a kilo. If you just stick to the basics, something's 50 cents a kilo, there's a good chance it's rubbish. If something's $20 a kilo, there's a good chance you're getting
ripped off.
Yeah, so you've got to... It's a balancing act. But sometimes in investment markets, when things are cheap, they're not always rubbish. So sometimes sentiment, people get rid of their investments.
He lost me at oranges.
Okay. All right, I'll give you the market update. If you're lost on that, Glenn, you might as well have a snooze now, because overnight we saw on Wall Street the Dow Jones Industrial Average put on a healthy 207 points, or just under 0.5%, to end the session at 44,174, whilst the Nasdaq was almost 1% higher at 21,450, and the S&P 500 put on over 0.75% to 6,389. Across the Atlantic, London's FTSE was slightly lower at 9,096 points, with the French, German and Italian bourses mixed. Gold continues its stellar rise, putting on over 1%, or $37.60 US, to $3,491.30 US an ounce, which is just amazing. West Texas Intermediate was steady at $63.88 a barrel, whilst Brent crude was 23 cents lower at $66.20 a barrel. Slightly different there because of the distance. People ask me, why is the difference? Well, one's in the ocean and one's on the land. So that's why you've got to have shipping costs.
Gotcha.
They're both sweet crude. And the and the A dollar is slightly lower against the greenback and is currently buying 65.22 US cents a little while ago, with the ASX 200s by 5 points higher, showing a start to Monday on positiveness, whilst we saw our market give back 24 points on Friday to end the session at 8,807.
Excellent work. Now, today you wanted to talk about superannuation slip-ups that can cost you a fair bit of money.
Simple super slip-ups. That's hard to say. Simple super slip-ups. Why don't I invent something easier? Look, investors need to be careful how they lodge documents as a notice of intent, or an NOI form, that they give their super fund. If they don't do it in the right order, it can cost them thousands. Here's an example and it's really unfair. Ordinary people that qualify doing the right thing, they're just losing thousands of dollars, and it's quite unfair. So let's look at a simple example. Michael, 64, is retired. He was a sole trader, and he's keen to start an income stream to provide tax-free income in retirement. He's eligible for a super catch-up contribution because he didn't put much super in over the last 5-10 years.
Right.
And he had under $500,000. So he got $162,500, put it into his super fund and said, "You beauty, I'm going to get a tax deduction for that," because he qualifies.
Yeah.
So it'll offset some of the tax he has to pay on selling a property that he sold, a rental property. After making a contribution and satisfying a condition of release, that's all just gobbledygook, Michael started that account-based pension or income stream. Shortly after the end of the financial year, he submits his NOA to claim a tax deduction for this $162,500, but regrettably, the super fund said, "You're not going to do it because you didn't put the form in the right time."
You're kidding.
No, so Michael was prevented from claiming that tax deduction, and just for a simple paperwork error, and he's probably going to be out of pocket $77,000.
That doesn't seem fair.
No, I don't know if the ATO enjoys watching people trip themselves up, or if they're just forced, they're whipped by the government to extract as much blood out of the stone. But to me, it just stinks. So be very careful. Make sure that you do the procedural paperwork correctly, as it can cost you thousands.
If Michael turned to a professional, however, would he be protected in that scenario?
Yeah, if an advisor, this would probably have to be there's a line between financial advice and accounting. I'm both, but it'll probably be in the realm of financial advising that you need to do this, because it's a superannuation question, and that's a security under the law, so you need to be licensed to do that. And if someone stuffed this up, the advisor would definitely be liable.
Turn to the professionals. That's what I'm hearing.
Turn to the professionals.
Well, but just
how much would it have cost him to get a professional to sort that out and save him? How much would he have been charged?
$77,000.
What would he have, the professional have charged?
If they were an existing client, probably not much. Probably nothing.
Yeah.
If they've got an existing relationship and the advisor is being remunerated by the customer for their expertise on an ongoing basis, it costs them nothing. Probably $3,000, maybe $2,000.
And he's down 77,000.
I know, it's sad. Look, I'm more interested in why the government doesn't just step in and say this is unfair.
Yeah.
And I know they're broke. Most governments are broken. Victoria is in the doldrums. This is a federal government decision, and why do they do? Why do they make our lives so complicated?
Yes.
But you're trying to align two words that don't belong in the same sentence, and that's government and fairness.
Well, I don't think governments are deliberately wanting to be unfair. I just think they're run by people who live in a dome that's removed from reality.
Yes.
They don't understand. Poor Michael, who had his cleaning business and worked his fingers to the bone, he doesn't understand paperwork for superannuation. What is this? It's just a stupid rule. And, of course, that's the legislation in Part 16, subparagraph 3, states that you need to do. Oh, go get a real life, will you, please?
Harry has called through. Good morning.
Aren't I rude?
Yes, good morning.
Harry,
Dominic.
how are you going?
Good, thanks. Getting close to retirement, and I believe between the ages of 65 and 75, you can take money out of your super and then put it back in to do something about making
Harry.
it tax exempt. Could you explain that for me?
No, because it'll drive everybody mad and they'll switch off. Basically, I'll give you a summary. There are rules in superannuation designed by nutcases in Canberra that give you a tax benefit if you increase your tax-free component. So because you've satisfied a condition of release, which means you can take your money out by turning 65, it's sitting in your bank account. You can put it back into super, and it's like painting your house. It gives you a fresh base. It gives you a better outcome than if it was sitting in the bank. So there are recontribution rules for anybody under 75, so it doesn't matter whether you're working or not. And those contribution rules are made up of concessional contributions. That's ones where you get a tax deduction. There are non-concessional contributions, which are the ones that you're talking about. There are catch-up concessional contributions if you've got less than $500,000. I'll tell you, people are turning their radios off right now. More than if you've got less than $500,000, you can make catch-up contributions, like poor Michael tried to do. And then there's downsizer contributions. So there's 4 types of basic contributions that you can use, of which one, the non-concessional contribution, is what you're talking about, and what it does is it's like paints your house. It makes it look better from a tax perspective. Does that make sense, Harry?
No, not really.
I warned you. You
asked exactly what we're aiming for.
Yeah, I know. But all I can say is that the formula, the algorithm, we'll call it. That sounds.
The accountant would know.
I do this in my sleep, but how do I? When Darren goes into the doctors, they're going to do all these things. Darren doesn't understand what they're doing. He just trusts them.
I'm still at oranges.
Harry, look, go to collinshouse.com. Click on the contact me thing. Send me your notes, and I'll send you some. These are really terrible things. Fact sheets.
Oh, right. Yeah. Okay. Gotcha. Hold there, Harry. We'll get your details at 5 to 10. Dominic Alafaci is here from Collins House. We're getting a lot of calls, Dominic, and you're going to stay on for a little while because I want to throw out a topic as well. So we're getting plenty of callers, and I don't want to...
I'd love to stay on.
Is that all right?
Yeah,
because all of a sudden there's been a tsunami of callers. And Lou joins us. Oh, no, we'll hold off on Lou because we've got more time after the news. And Glenn, you have to go to... You got a bit on this Saturday. You're going to the gym.
I will be off to do some training, then off to some football, and then off to do some more work. So life continues.
You're going to buy some oranges?
I will potentially buy some oranges. Be careful not to buy them at $20. Get them around about the $3 mark.
No. In Japan, it's $20 for a perfect orange.
Oh, there's no such thing as perfect.
Like
in Japan there is.
Like the drunk that walked into the greengrocers and he says, I'll have 4 pounds of oranges. And he said, we call them kilos now. He said, all right, I'll have 4 pounds of kilos.
Well, on that note, I will see you in a few weeks' time where you're going to be upright, rip-roaring, ready to go.
Good on you, Glenn. Good luck for the next few weeks, and thanks for filling in as well.
I won't dent the car.
Don't dent the car. Drive carefully, Glenn. Whatever you do. Dominic, see you after the news.
Thank you.
It's almost 10. Dominic Alafaci is here, and any excuse to play in excess. John Farris's birthday tomorrow. He's 64, drummer from NXS, brother Tim. If there's someone's birthday in NXS, you play a song, don't you?
Oh, what a great song you chose.
Yes. We have some calls for you. Dominic Alafaci from collinshouse.com. Lou, thanks for calling through.
Thanks, Dominic. Darren, how are you both?
Very well.
Good, thanks, Lou. How can we help?
Great. Dominic, we have an investment property in our self-managed super fund. We've held for 7 years. Mm-hmm. So it's nearly paid off. So it's got a couple, 50,000 left. Mm-hmm. Now, we're thinking about selling that, because there's not much capital growth. And it'll be about 1.1 moving that into our self-managed super fund, managed fund.
Yep.
To get growth over, and I'm 60, so is my husband 61.
Yeah, I'm hearing you, Lou. I've heard about these situations.
Darren's listening to a mirror. How does that sound?
That's right. I'm very keen on what the advice will be here.
So, Lou, are you asking for investment advice on what to do with the money, basically?
Well, what we think is move that 1.1 when we sell it straight to the managed fund, and I think they're returning about 7% around about overall.
I think that's a good idea, Lou, and subject to me understanding more of your situation, I can give you personal advice, but just generally speaking, that sounds like a good idea. I would have it well diversified, so make sure it's not just one managed fund. If you gave Collins House the money, let's say, we would invest it in our online service, and there's no entry or exit fees. It's very low cost, and we would have something like 4,000 different investments in there. So there'd be a group of investments called exchange-traded funds that would invest in, let's say, the top 100 Australian stocks or 200 Australian stocks. There'd be another fund that invests in the NASDAQ, another fund that invests in the US Dow Jones and S&P 500. There'd be a European fund. There'd be a gold fund. We don't invest in crypto, but you could have a bit of a play with that yourself if you wanted to, maybe 1 or 2 or 3%, but generally we stick to the stuff we understand and we trust. There'd be some investments that we would make into income stream investments, and sounds rather silly, but people who have got tolls on their roads, or they've got David Bowie's hit list that you can get a royalty from, so things like that. So they're the sorts of things we diversify.
I'd love to hear from you if you've got a collection of something which has grown up over the years to be worth some money.
We'll talk about that in a sec. But just to finish up with Lou, if you'd like some more information, just go to collinshouse.com, click on the thing to speak to me, and I'll follow you up.
Hey, Lou, was your property an apartment or a house?
It's 2 apartments in Richmond.
Gee, that's handy. Yeah, there would have been some nice.
In East Melbourne, isn't it, Darren?
Yeah, East Melbourne would have thought a pretty exclusive address, but capital gain over 10 years has been $27.50.
I think Lou's had the same experience.
No capital gain.
Have you had any capital gains at all, Lou?
No, I wouldn't have, but it served the purpose we needed it to. So
very good. Very good
on you.
On you, Lou.
And you, I bet you're sick of paying land tax, Lou.
Well, I've only just got the land tax bill yesterday.
How much was it?
$500.
Oh, you're lucky.
How does that work?
Let's not talk anymore about this. Lou, pay the $500 and be very, very happy. And don't tell anybody.
Thanks, Lou. Sarah.
You're very lucky.
Sarah, good morning.
Hi, good morning, Darren and Dominic.
Yes, Sarah.
I managed to go over my concession contribution.
Oh no.
For a few years. So I just received a letter from ATO.
Yes.
For the year 2020. So I think more to come. But in the letter, I have 2 options. One is to keep it in the non-concession, and the other one is to release. But in the letter, they have some statement that I'd like to clarify, or if you can help.
Mm-hmm.
It says when you complete the election form, this is for option 2, we will ask your nominated super fund to release the amount you nominated and send the money to us. We will use the money to pay any tax or Australian government debts and refund any remaining balance to you. What is Australian government debt?
Yes, okay.
In the billions.
Sarah, let me break this up into 3 sections. Firstly, it's exactly the topic I was talking about earlier. You made a paperwork error, basically. You didn't intend to do this. So the notice of intention, the NOI...
Is this similar to the one you were talking about earlier?
It's a different contribution, but... it's related in many ways. So, look, you really need... To give you a simple answer to your first question was... what a tax debt. If you have an outstanding, let's say it's a family law issue, you might owe someone some money, or you have a tax debt from previously, from PAYG, you haven't paid enough tax on your earnings, etc. You may owe the government money, and they're going to use this opportunity to get the super fund to pay them. Now, I think that's fair. I don't have a problem with that. So if you don't have any of those types of debts to the government, then you'll be in the clear. The second thing is there might be tax that you owe the government because of your paperwork error, which, as I mentioned earlier, is quite unfair, and they should stop doing this. They should just let you correct it, put the money where it should have been, and Bob's your uncle, but they may not. So you should leave it. I've got a good accountant that can actually grovel to the tax office for you. So if you'd like, I can refer you to a good accountant who can, as I said, see if they can mitigate any taxes that you have to pay. So go to collinshouse.com, click on the little thing, contact me, and write a little note what we discussed now, and I'll get someone to contact you.
Thanks, Sarah. To Anne-Marie, good morning.
Good morning, Darren, Dominic. Dominic, you said before about buying gold. We've got a slightly diversified self-managed super fund with plenty of different shares and things, and I think that gold's a good option. Do you have a Dominic Alafaci on buying gold?
I always like buying a diversified fund, and there are and there's in the gold sector there's GDX, which is I'm not giving you a personal recommendation. These are just general statements. GDX buys gold miners, so companies that are digging for gold. So
remember the snake that used to work here? He'd go down and buy bars of gold.
Yes, you can buy
physical. In his sock drawer.
You can buy physical gold as well. I used to do that, but I prefer buying these 2 types of things. One is GDX, which is a gold mining company. So when the price of gold goes up, they go up, and they make money on their operations. And the other one would be like Perth Mint, something like that. Now, they're both available in exchange-traded funds. They're protected by the Australian Stock Exchange. Although the ASX has had a bad week, Darren, they made a big muck up during the week, and they're in a bit of strife. But leaving that aside, we've got a very robust, healthy stock exchange in Australia with good protection. So I would suggest those Perth Mint or GDX. They're 2 of a number of them that you can buy.
Good. Thank you for that.
My pleasure.
Darren, look after yourself whilst you're away.
Good on you. Thanks, Anne-Marie. From Anne, we're dropping the Anne or Anne-Marie and just calling you Marie. Good morning.
Good morning, Dominic. I've got a query about low income cards that I've applied, and Centrelink have rejected it because they said I earn too much of an income. My income is I only work 2 days a week. My husband's fully retired, and they classify the super that we receive as an income.
Okay, 3 things there, Marie. It could be the income that your husband is receiving from his super income stream, whatever form that is, that will have an effect on the couple's income. The second thing is, you said you're working part-time.
Days?
Yes, and what are you earning roughly?
About $600 gross, and then I get the super...
On top of that, okay. Well, the combination of those 2 things, your income, the superannuation that's sort of deemed to be in your name, and your husband's income, they're the 2 components that will make up the the assessable income that Centrelink are talking about. And the third one will be if you have any money in the bank or shares or rental property or anything like that, if they might be deemed to be giving you income as well. So there's the three parts: your husband's income from his pension, your income from your salary and your remuneration package, and your other assets that are deemed to generate income. So the three of those, you may have put yourself over the limit.
Good on you. Thanks, Marie, for the call. Dominic Alafaci is here. Tony, good morning.
Oh, good morning, gentlemen. Dominic, my wife and I withdrew our money out of our superannuation fund. We're both in our 70s, and we purchased a residential rental property. And I must say, in the 3 years that we've owned it, we've had nothing but horror stories. Unfortunately, because of the land tax rates, all the outgoings and the issues with the tenants, we decided that we didn't want to die over the issues that our tenants were creating and the State Revenue Office. So we actually sold it, and, Dominic, we took a major hit.
Sorry.
My issue is this. I need to give instructions to my lawyer where to deposit the money at settlement, and I don't know where the issue is, whether I've got an issue if I put the money back into our super.
No. Firstly, put the money in the bank and get some advice, number one. How old are you, Tony?
I'm 74 and my wife is 75.
Okay, it's going to be tough to get the money back into super. You can put some money into super. This was definitely a rental property. It wasn't a home that you lived in.
No, a rental property.
Right, okay. So it's going to be hard to get the money back into super. You might have to look at alternatives. How much was the capital loss?
About 280,000.
Oh, my goodness.
That's hurt.
How much money will you get on settlement? How much money will you get on settlement?
Well, the stamp duty alone was close to 100,000.
Oh. So when you get the proceeds that your solicitor's going to give you, less agents' fees and advertising, etc., what are you going to have in the bank?
About 1.2 million back net.
Okay.
After paying all the outstanding.
Look, to be honest, I don't think you're going to... Well, firstly, you're not going to be able to get the money back into super, all of it, number one. Number two, I don't even know if it's a good idea if you should, because if you've got a $280,000 capital loss, it might be best to invest outside of super in an area that will grow so that you can offset your capital loss against future capital gains.
Yeah.
So... this is complicated. You need to get some advice. Look, I would be doing a disservice to you to recommend any particular route. So please, put the money in the bank, number one, and don't worry, just take your time. Secondly, if you don't have a good financial advisor, go to collinshouse.com, click on Contact Dominic, write me a little note, and I'll contact you during the week.
Good on you. Thanks, Tony. To Wayne, good morning.
Yeah, good morning. I might know of someone who's been supplementing super by buying gold and silver bullion at under $10,000 at a time over the years, which does not get reported to Austrac, i.e. the government don't know that
that's
gold
fine.
and silver bullion exists, Now, with gold and silver going up, if you sell less than 10,000 at a time, it doesn't get reported to Austrac too. Is that the current status?
Wayne, yes and no. They do know what you've bought because every supplier registered seller of gold or silver needs your ID before they'll sell it to you, unless you're buying it from a farmer's market or you're buying it on the back of a truck. So they do know that you've got the money. They can track it back probably 5 years, I think. I don't know they go back that far. But I wouldn't worry. I mean, and I hope Wayne's not your name, but just tell me, how much money do you have, you reckon, value of your precious metals?
Oh, this person might have a significant amount.
So more than $1 million?
Which has gone up, obviously, which has gone up a lot of money in the last 5 years.
More than $1 million?
No.
Okay, look, I wouldn't worry, mate. Sell it, make a profit with your ears pinned back, and because you have to do your own tax return yourself, it's self-assessment, that person, tell your friend that they have to declare on their tax return what they've done. And you need to be sure And forget about Austrac. Austrac's for dirty money. Unless this is the proceeds of crime or it's counter-terrorism, it's terrorism money, you've got nothing to worry about. If you've just saved up and you've got 800,000 or 500,000 in gold, half your luck. Don't worry about Austrac unless the money's from, I said, the proceeds of crime. So tell your friend not to worry. But when you do your declaration, you've got to be very careful on your tax return. So if you need some tax advice, go to collinshouse.com, click on that, write me a little note, and I'll refer you on to a tax specialist too. Because, look, it's very straightforward, but don't make a gold or silver slip up because you can get fined.
Thanks, Wayne. To George, good morning.
Good morning, Dominic and Daz. This is works out to be a follow-up on the previous call. Where can I go to physically buy gold bars?
Okay, there are two places I go to.
Yeah, there's one in the city.
There's two in the city.
Is there?
One's in William Street, one's on the corner of Swanson Street and Collins Street.
What's it called?
Oh, now you're going to ask me to remember.
I'll be riding past it on my way home. I'll have a look.
Oh, really? Oh, you got to go upstairs and press a button.
Do you?
Locked. Yeah, it's a little locked room. Oh, golly gosh.
Is it AG something, or is it the snake used to tell me he used to work here?
I've had a mental block because I've bought and sold bars, both of those places.
Yeah.
Could you leave your details off air, George? And when I get home, I just can't remember their names, and I'll email you the two people. They're both trustworthy. Guardian Gold is one.
Guardian Gold.
That's the one in William Street.
Right.
That's very, very good. And I can't remember the other one, which is they're not as big, but you get you get a good price there. So I'll give you the second one.
You're
going to buy some gold bars, do you reckon, George?
Yes, I'm not getting offered too much in interest at the bank, and it's always crossed my mind to spend maybe 20,000 on gold bars. The way the world is going with Trump running things, and I think the price can only go up.
Yeah, I wouldn't be not as negative as you are about the way Trump's running things, to be honest with you, George, but I still love gold.
Here we go. You can buy half an ounce of ABC bullion cast bar gold at $2,699. That's from your company.
No, not from us.
No, not from you, but from Guardian Gold, the
Guardian
one you just
Gold,
mentioned.
yes.
Yeah.
And the other one's Perth Mint. You can go online and buy gold from Perth Mint as well, George.
There we go. And finally, John, good morning.
G'day, how you going?
Yeah, good, John.
How can we help?
Just a quick question. I'm selling an investment property and there'll be capital gains tax payable on it.
Yep.
If I make a 3-year contribution in non-concessional into a super fund, does that automatically reduce the capital gain that I will pay on the investment property?
Possibly. The word you're looking for is a concessional contribution, a personal concessional contribution. Are you self-employed or you're employed?
No, I'm no longer working.
So you're retired. Okay. Are you under 75?
Yes.
Great. So you can make what's called a concessional contribution, which is a tax-deductible contribution in effect. But remember, you've got to don't do what half an hour ago, whenever I was talking about Paul Michael, who did the same thing, had a rental property, sold it for capital gain, didn't put the NOI in at the right time. So please get someone to help you. But the answer is yes, you can do it if you're under 75. The amount that you can put in is about $30,000. If you have less than $500,000 in super and you haven't used your concessional contributions, which started at $25,000, $27,000, they went up over the last so many years. You can, if you have if you haven't used up your limit, you can make more than a $30,000 contribution.
How's
that helps?
Okay.
Good on you.
And the non-concessional doesn't apply?
No, non-concessionals, you don't get a tax deduction for it. So it's not. It's good.
I'm no longer working, and I don't.
No, you're going to have a tax deductible. You're going to have a tax. You're going to have a taxable event, so you want to use a tax deductible one.
Good on you.
Good man.
Thanks, John, for the call, and thank you, Dominic Alafaci, collinshouse.com. You enjoy the weekend.
And you look after yourself.
Good on you.